Hey, it's Dario, and welcome to this new update on my finances. Um, I know I said that that I would like to do this every month, but well, I didn't have much time, and also I didn't really want to, and also it didn't really make sense even to do that every single month because well, my situation is not that complex, so I just don't do much each month. So I guess we are just gonna do a quarter review. So now it's been 3 months that I'm investing with the strategy that I presented in the last video, and it's now a new year also. There have been some changes. There have been some changes at my job in general, how I get paid. I will explain it to you now. And then there have been changes in how I track my money and my net worth. Maybe let's start with my income. So let's take March as an example. We will basically base this video on March. Maybe we will talk about the entire quarter, but basically I want to talk about March. As you can see here, if you watched the other video, I showed you that every month I make something else. So let's just go to 1st December. Here you see employment, Dario, 6,200 and something, 6,300 almost. But if you go in March, it's 5,941. So this here, this is the amount of money that I actually get in my bank. On top of this, I will have to pay taxes. Why did it fall? Well, it basically fell because now this year I'm turning 25. And when you turn 25 in Switzerland, you start paying what is called a second pillar. In Switzerland, there are three pillars for pension. There is first pillar, that's the state pension. You pay a certain percentage of your income, and then you get some amount when you retire, but that amount is not tied to how much money you actually put in. It is somehow tied to that also, but not that much. So it's not a direct correlation. There is a maximum that you can get, there is a minimum that you will get, and also you get based on how many years you worked in Switzerland. Then there is the second pillar. The second pillar is what is called a professional pension. Basically, you only get it if you work and if you're not self-employed. You cannot do a second pillar if you're self-employed. You can do a third pillar, which I'm going to tell you about it now. So basically, in the second pillar, some amount of money, uh, some of some money you put in into this second pillar, some money is put in by your employer. And then the second pillar is also divided into obligatory, mandatory second pillar and complementary second pillar. Not everyone has a complementary second pillar, but employers, to be competitive in the market, they of some employers, especially big ones, offer a complementary pillar. And on this complementary pillar, usually you can decide how much money to put in, somewhere between 0 and 10% of your wage, and the employer also can decide how much money they want to put in. My employer basically puts in this amount of money. This amount of money is put in by my employer into the complementary second pillar. This is a percentage of my annual salary divided into 12 months, not divided into 13. This salary here is divided into 13. This one here is divided into 12. This is the amount of money that I put in into my mandatory second pillar, and this is the money that my employer puts in into the mandatory second pillar. Now you could ask, where is the money that you put in into the complementary pillar? Well, my employer has a minimum of 0%. So I can decide not to put anything, and they will put something in. By the way, this is how the contract is. Unfortunately, the contract is in German. I do know German, I do read German, but it's not 100%. I'm not 100% sure that I understood correctly. So I should ask my employer what actually I get this money, this one here, this 400. This one I sure get it. This one I'm not 100% sure, but I'm accounting it for it because I'm pretty sure. So if you then sum all of this up, by the way, in this salary, it's not included all the pension expenses that are already deducted, all the insurances that I pay, for example, for loss of job and all of that, because those are also 50% paid by my employer, 50% by me, and it doesn't really make sense for me to keep track of that. So I just skip all of that. This is the amount of money that I get in my paycheck, in my bank, sorry, and this is the amount of money that it's put aside for my pension. So if you then sum all of this up, that's 7,026 francs, which is very much higher than 6,300. Essentially, from January, I received an increase in my salary of 700 francs per month, even though in my bank account the amount of money decreased. Now I also keep track of the second pillar. And if you go here, you will essentially see that I keep track of, sorry, that's the second pillar of my girlfriend, which she is turning 25 in the next year, so she's yet not paying second pillar. So this is my second pillar. Our rent increased a little bit to 1,022 francs. That's here, and that's about it. Another thing that changed on how I keep track of my money is that I don't include taxes in my net worth anymore. I told you that I wanted to do my tracking cash based, but especially this year, I will not pay into my taxes during the year. I will only pay at the end of the year. So it's very misleading because I saw that I'm starting to accumulate a lot of money that it's actually due for taxes and it's not my money. So if I include it in my net worth, it will be much higher. In fact, as you can see here, this is my savings rate. Uh, at the end of the year 2023, I had a savings rate of 77%. In what is it? In March, sorry, in February, I had a minus 63. That's because all of the money that I saved for taxes, I deducted it from my net worth in February, and I started this new way of keeping track in February, and I didn't go back all the months. And then here in March, it's my actual savings rate. So the savings rate that I managed to do deducted the taxes that I expect to be paying. So as you can see, it's a very big difference. So you go from 66 to 77 more or less percent to an actual 50%. That's a bunch of money. As you can see here also, I have a good decrease, sorry, it's here. I have a good decrease in my net worth. That's because of my taxes and then an increase. The reason is also because I don't want to have an increase in the whole year, then a bunch of money goes out of my net worth at the end of the year. It doesn't really make sense. And I figured that out when I actually looked at how much money I'm expecting to pay in taxes. If we go here in the charts, we can see that basically housing is it's the biggest expense that we have, but it's not that big. It's 25% of the expenses. And then we have groceries, which we try to keep around 400 francs. It's sometimes harder, it's sometimes easier. This month we did a lot of grocery shopping to stock up, and probably in April we won't even do grocery shopping. We will just go to the local store to buy fresh things when we need them, but we will probably not do the big monthly grocery shopping that we normally do. And then fun and vacation, I think it is for a flight ticket that my girlfriend bought to go in Spain. So 300 francs of those are for that. Yeah. And then, well, health and health for me and health for my girlfriend. That's something usual. And here my girlfriend had to pay the month of February, I guess, if I remember correctly, or the month of no, the month of February insurance and the month of March because they made a mistake in February, so she didn't pay because she had to wait for the new bill, and then she paid all both bills in March. As far as my health, I just bought some pills, so that's why it's higher than my budget. Our budget is the health insurance, the cost of the health insurance. Gas stations also went a lot up because we did some trips one in Germany to go grocery shopping like we do every month. And then we went to my parents in Ticino, and then in Italy to my grandmother to do some repairs on the van and to do the service, the periodic service that we have to do. Now I think I'm starting to include Netflix in here because I don't remember where I put Netflix each month. I think sometimes I put it into housing, sometimes into phone and in internet. I should write it down and then be consistent with that. But it's only 12 francs a month, so that's not much. And then, well, transport it's fine. It's our subscription, a monthly subscription to transport. Scooter and camper. Well, we had to do some repairs, and so yeah, that's that's basically that. We bought some new plumbing because we had some problems into the van because of the winter. Some pipes exploded, so we had to do some repairs there, and that's general it. That's about it. And then we also had to pay the insurance. If I no, not the insurance. Sorry, um, the taxes that we have to pay. So how do you how can I translate? Well, the taxes, the vehicle taxes, and that's it. Eating out, I'm pretty okay with that. I ate a lot out. I'm starting to eat too much out because the food at my job is it's good and I don't have to cook it. So it's not that expensive. It's like 12, 13 francs per meal, but it's just not okay. I can cook, so I can cook. So, as far as the investments go, now this is April, so let's go to March. Um, as far as my investments go, it didn't change much. I didn't do any addition to what I told you I would do when I did the video in January. So I actually did the additions that I talked about, and this is my current status. So the value of my third pillar, this is the third pillar of the three pillar system pension in Switzerland. Third pillar is optional. You can do it, you cannot do it. It's just a fund. It's like buying a bunch of ETFs. You can choose which ones to buy, and the money that you put in, it's deducted from your income, and you don't pay taxes on it. But you pay taxes, a substitutive tax, when you go to pension and you extract all the money that it's in this fund. It's very tax advantageous. There are some other reasons why you could take this money out, for example, buying a house, funding a company, but you usually don't take it out. You wait until pension and then you get all the tax benefits. So the value increased quite a lot. If we go back to here, it was 8,700 and now it is 9,900. So it increased by 1,000 francs. That's a lot of money. It really went well. All the markets went well. Also here you can see that it went, sorry, here. You can see that it went really, really well. Only in the month of March, there was an increase of 4%, here an increase of almost 6%. That's quite a lot. But now there are two new entries, one here and one here. This one, I partially talked about it. It's my second pillar from the company that I work for. Um, and basically, how do I put it into my entire portfolio? I can see how the second pillar is composed because every year they do a report. They say in which assets they invested, how much, and so on, so on. And so I can see that it's mostly 50% bonds and 50% stocks. There is a bit of real estate, but it's okay. I can treat it as bonds as well. So more or less, it's 50-50. That's why when I go into stocks and I go here, well, now you don't see because I froze all of these numbers. But if I go into April, you will see that the formula is now this P47. Sorry, the percentage that I would like, and then this P47, which is these alternative assets that I'm going to talk about now. And then there is P26, which is this one here, the second pillar, divided by 2. So half of the second pillar is deducted from the stocks percentage, and half of the other second pillar, the other half, is deducted from the bonds percentage, so that I have a good a good overall balance, and I can control my portfolio a bit better. As you can see, also there is this third pillar now included because I reached the maximum amount of money that you can put into the third pillar. Well, if there is no maximum, you can put how much money you want, but you cannot deduct more than 7,056 francs unless you are self-employed. If you're self-employed, you can deduct, I think, up to 30,000. That's to compensate the fact that you cannot have a second pillar. I reached the maximum, and now I'm just keeping it as it is. So I'm just keeping the target value equal to the value plus this maximum, the 7,056. When I will actually deposit, which is going to be this month, then I will just put the target value equal to the actual value, and that's it. And therefore, under stocks, I also deduct this amount of money, and then I just say how much that whole should be. So yeah, overall 70% should be in stocks, which by stocks it includes the third pillar and also includes these alternatives is a lot of stocks, but it's not only stocks, but since stocks and alternatives are with a similar volatility, and in any ways alternative is only 3% of my of my net worth of my portfolio, sorry. um, it doesn't matter actually to what other asset I deduct it from. I decided to include private equity that I have, and my cryptos. I didn't want to do it before because I thought that it would be irrelevant. It's only 3%, actually. It is kind of irrelevant, but just to complete my portfolio, I included those as well. My car, I'm still not including it because very difficult to include it. First of all, it's difficult to estimate the price because it's a van that I converted, that me and my girlfriend converted together. So how can I put a price on something that I converted that it's not converted by someone officially? So I could put the amount of money that I paid for all of it, but it's not the amount of money that I would probably sell it for. Maybe I will sell it for more or less. Um, so it's very hard to estimate, and also we don't plan to sell it. Um, and also it's more probable that we will end up taking all of the valuable things out of it to build a new camper and then destroying the vehicle than it is to sell it. So I'm not going to put it, at least for now. Probably also in the future, but at least for now, no. But these things I am including it just because it's easy to put a price on them. I have the price of the private equity. It's given to me by the company, so it's not a public company, of course. So this is not necessarily the price that I could sell the company for, the shares for, but it's the price that new investors have to pay to buy those shares. So at least it's a reasonable price. And these two, of course, are prices available to everyone. So now you also see how many cryptos I have. As you can see, I don't have Bitcoin. And that's it. Here it's my net worth. This excludes, sorry, here in March, it's my net worth. This excludes the taxes. And here are the percentages, sorry, here are the percentages of the weights that I put in respect to this net worth that I have invested. So in stocks, 40%, in bonds, 20%, and all of the others make up a 6%. And then cash, it's a lot of money. So currently I'm basically what is it, 40-60, more or less, 45-55, something like that, between stocks and assets that are almost cash or bonds. Uh, but a lot of this cash has to go in these two. So there is a lot of things that I have to buy when it comes to the new month. Some stocks, not a lot of them because they grew. So they basically filled up my necessities for the month of March, but probably I will invest in either the Europe or the US. I don't want to invest in Japan a lot of money. But maybe I could do all of this money, all of the 800 into, I don't know, Europe or the US. I don't really care. But I don't want to split it up like that because I would pay so many trading commissions. So I would probably, because the US it's the cheapest for me to buy, I would just put 800 into the US. Probably. I don't know yet. And then when it comes to bonds, I will probably decide one of these two bonds and put all of this money into one of these two. So that's 1,300 francs that goes probably into this uh, short-term bond ETF, and then I will put this amount of money into this corporate ETF. These two, I will probably either leave them out or put them into here. Or probably this amount I'll put here, and this amount I will put it here, because this is treasury, so it's comparable to government Swiss, and this one is corporate, so it's comparable to corporate Swiss. So maybe I will do it like that. Again, because I don't want to pay too many trading commissions. Even though this would be only $1, by the way. And then that's about it. As far as cash goes, I have to basically take out a lot of money because now I have a big cash reserve. So a lot of this money has to go into these things. And here I have to put in 7,056. Probably I should look at this one because here it's where I change the formulas. So yeah, as you can say, as I said, probably I will put a lot of money into the US, and then here, as I already explained, and then the 7,056 into my third pillar. The reason why I didn't put money into my third pillar before, even though it's free for me to put money in, I don't pay anything. I just paid it 0.39% expense ratio that you see here every year. First of all, because well, I just wanted to max it out and just do one payment. And then because I wasn't sure. I know that I can take the money out of the third pillar whenever I want if I want to buy a house. And if you don't know why I want to buy a house, you can go back to the previous video. But I just don't know. I mean, first of all, I don't know how much time they would take to give me the money. Um, how many taxes I would have to pay. Do I pay the percentage that I would pay in pension? Do I not pay anything, but then I have to give it back to the third pillar? Do I pay taxes as if I didn't even put the money into the third pillar? So I'm not sure. But at the end of the day, I decided to just put that amount of money. It's not even that much. So it's basically 3 months of savings. It's not that much amount of money. And in many ways, I know that if I want to buy a house, I can take it out somehow. So I'm pretty confident in doing that. So this is basically it, I guess. I'm going forward with this system. I'm going forward with my portfolio. I don't intend to change the portfolio for now. I will just add money as the calculator tells me to do. I will not buy any more alternative assets. I just invested for fun, honestly, just to see how it would be to invest in private equity. But that's about it. So thank you so much for watching this video. I hope it was useful. If you have any questions, you can leave them in the comments. I will gladly respond to your questions. And maybe we will see each other in the next month or maybe in the next quarter. Probably the next quarter is a more plausible date to fix. But I don't want to fix anything because the last time I fixed it, then I just didn't do it. So yeah, I hope you liked the video. If you did, then please leave it a like. If you want, you can subscribe. And that's about it. Thank you so much, and I'll see you guys in the next video.